Okay. And let's record. And record to cloud. Okay. All right, all right, all right. Welcome, 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 ladies and gentlemen, to Bulls versus Bears, the strategic market forecast. And it's so good to be with you here on this fabulous Thursday, August 6, 2026. Big shout out to my YouTube people. And so tell me where you go ahead, tell me where you're from and where where you're on what you trade. What you trade Forex, you trade futures, you trade CFDs. Let me know. We're and do a quick sound check, video check. Make sure that you hear my voice and see my screen. And we are broadcasting live on YouTube. We're also streaming into our school community. Big shout out to the $50,000 to $50,000 challengers, the new ones for the month of August, the ones who are continuing with us. So good to have you there too. And also our Elite Traders University Pip and Run traders in their school community as well. And so we are broadcasting around the world, guys, and it's so good to be with you here. And we have an exciting program for you. So if you've ever had a problem, deciding what to trade or what's moving the markets, this is the program for you. This is the Bulls versus Bears program. Okay. So let's go ahead and get started. I'm going to share my screen and we'll be set to go. And thank you so much for your input. Let me know that you can see my screen. Actually, we're going to try to use this screen today. Let's go ahead and that way I can keep an eye on the chat for people that might be in Bulls versus Bears. And let's go ahead and go to view and reading view. Okay, and let's go ahead and share the screen, guys. Share the screen. Okay, we're actually going to share screen number 3, right? Okay, we're going to do something different today. All right. Okay, and welcome again to the Bulls versus Bears. This is brought to you by Elite Traders University. Elite Traders University. I'm the CEO and founder of Elite Traders University, and our mission is to help traders, busy professionals, learn how to trade Forex and in 90 days or less using our proprietary pip and run trading approach. You can go to www.elitetradersuniversity.com for more information. Okay. And we're moving right along here. Okay. Again, this is Bulls versus Bears strategic market forecast. Things are jumping around a little slow, and so here we go. Let's go ahead and get started. I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for over 30 years and been teaching people and training people around the world. I worked at one of the world's largest Forex broker dealers in the world, helping people like you become professional traders using my proprietary system. So I've worked at the banks. I've worked at the futures Forex brokers, and I'm uniquely skilled, an ex-Wall Street analyst to help you in your trading. So if you ever wanted to find out more, you can always reach out and contact me. I've also wrote a book called The Gold Rush Blueprint, and I was forecasting gold at 5,000 way back when it was $1,900, and I wrote a book about it. If you want to scan to get a copy of that book, go ahead and pick it up. It should be on Amazon too, 1997. Okay. Today in our agenda, we're going to be looking at the dollar index, the euro dollar, the pound dollar, Aussie dollar, dollar yen, and dollar CAD. Those are the majors. And then we're also going to take a look at gold, silver, and oil. And then we're going to actually look at some the S&P 500 and Bitcoin. But I also want to highlight that we are going to be looking at the beginning, we're going to be looking at the news. Okay. We're going to be looking at the news. We're going to be looking at the the economic calendar. The economic calendar drives the market, and we're going to actually look at that economic calendar right here, right? So we're going to use my favorite tool, my market heat map. Is an arrangement of currency pairs by percentage change. It tells you what's hopping, what's popping, what's dropping, what's not in the market. You can go to mymarketheatmap.com and you can green is uptrend, red is a downtrend, gray stay away. Very simple tool. And I can give you you can get a free glimpse of it. Just go to mymarketheatmap.com. And then we have one of 6 powerful heat maps. And right now we have dollar Swiss in the top spot, up 0.72%, followed by dollar yen. We're a comeback, up 0.55%. Aussie dollar is in the back seat, up a little over 1/3%, right? And so green uptrend, red's a downtrend, gray stay away. Real simple. I use colors and shapes. Everything I learned in kindergarten, that's how I learned how to trade. Okay. And let's go ahead and scroll on down. But you also have access to the economic calendar. It may look a little fugly right there. Go ahead and hit the refresh button to reload. And if you do that, you'll go ahead and reload the calendar, click show more, and we're going to go through the economic calendar for next week. But this week, though, we're actually going to focus on there's non-farm payroll coming out, an economic announcement that comes out the first week of each month. It's one of the most powerful and the most important economic announcements that come out of the U.S. that influences the entire currency market. Now, this one announcement or this one economic flashpoint, causes the markets to gyrate hundreds of pips every Friday. And so you should know how to trade it and what to look for. And we're going to be looking at that today. So let's go ahead and scroll on down. So Friday, which is tomorrow, 8:30 Eastern time, so 19 hours and 49 minutes, we're going to have the countdown to the non-farm payroll. And non-farm payroll counts the number of jobs that were created in the United States for the month of June. It usually goes July. Okay, July non-farm payroll. They're always 30 days behind. Okay, so let's actually go back a little bit and show more. Okay, and then we actually can go back a little bit there. And then we go not that far back, but we want to see ADP. There was an employment announcement called ADP that came out. It came out really bad. Oh boy, it was 90. It really stunk up the place. 95,000 was the previous number for the month of June, and July was the forecast was 70,000, but it came out less than expected. It came out at 44,000. Okay, and so what did that do? I mean, it came out. That number came out today or yesterday. In fact, ADP. It really caused the dollar to go down. The economic miracle was a little bit of doubt was cast on the economic miracle. Jobs not being created. So again, to a deviation of minus 26,000, and so this is usually a foreshadow. ADP is a private company. It's not a government agency. ADP is a private company. In fact, when I worked for the brokerage, this was my company. This was the company that produced our checks. Our checks had ADP written on them. So this is easy for them to count how many people have jobs. Is you get a check. You get a check, you have a job. If you don't have a check, you don't have a job. So they just count the checks and they know how many jobs there are. So they count how many checks, right? And then they came up 44,000, right? So they're pretty accurate. Now the government's going to come out with a number, the non-farm payroll number. Now ADP does not do paychecks for government agencies and schools and police and public institutions and things like that. So they're not included in ADP. So this number may look small because it's the private sector, but then what's coming out on Friday or tomorrow is going to be all the ones, private and public, in non-farm payroll. Everybody but farmers. And I know if you're a farmer, you're probably like, how about me? It's like, well, you're working under the table, maybe. I don't know. Non-farm payroll. Okay, so no farmers. Everybody but farmers. So 57,000 was the previous number. They're forecasting 80,000. They're actually forecasting a rise. So it's interesting that ADP was less, but non-farm payroll. In fact, ADP, they forecasted lower. ADP, the private sector one was like 95. They said 90. But non-farm payroll says are actually forecasting a higher number, 57,000, and they're projecting 80,000. Okay, if that number is greater than 80,000, we could see a really powerful move in the currency markets. We could see the dollar totally taking over, moving back into prominence and other currencies. It really depends. You gotta watch the non-farm payroll numbers, okay, because sometimes it's dollar positive and sometimes it's dollar negative. If it's a really bad number, sometimes it actually weakens the dollar because uh, if there's not a lot of people with jobs, they can't buy stuff. If they can't buy stuff, then inflation is inflation goes up when people are buying. There's a demand for goods and services. If there's not a demand for goods and services because no one has any money because they don't have jobs, well, then prices fall naturally. And so there's no inflation. That means the Fed doesn't have to hike interest rates. And if the Fed's not hiking interest rates, then you won't see a rise in the dollar. Because why would people want to buy a currency with low interest rates? They go find another higher yielding currency. They might go to Australia or New Zealand to get a higher rate differential, right? So that's how, however, if we have a super strong number, well, then that could result in a, also a lower dollar because people say, well, gee, the economy is going great. Everybody has these jobs. They're buying stuff. Let's buy, it's a risk on market. Let's buy more stocks. Let's buy more higher yielding currencies. So it can go, and really it's now a real, you can basically look at the chart. We're going to look at the charts because I call these fundamentals anyway, right? We just know that the euro and dollar yen and the majors are going to go on fire. They're going to go crazy at 8:30 a.m. Eastern time. And so we don't want to really trade the exact moment that non-farm payroll comes. We want to wait maybe a half hour to an hour and let because non-farm payroll is not just one number. It's a big, thick report that comes out of the BLS, the Bureau of Labor Statistics. It's a ginormous number, right? It's a whole bunch. It's for every sector, and there's writing about it, about what's going on, whether there's storms or floods or layoffs or closing of plants. So it's a big, thick document. So you got to figure when this thing comes out, there's the headline number, but there's a report, and then the traders are actually going to read through it. Right, they're going to have their analysts. Now they have AI. The AI will probably go through a lot bit faster. They're going to go through this big, thick labor report for the BLS, from the Bureau of Labor Statistics. They're going to read this report, and then, so you're looking at 8:30 with a release, a bunch of reaction because there's no volume in the market, a lot of whipsaws, and then 30 minutes later, the market's going to get directional because by that time, the analysts have already read the report. They've already digested it, and they can make a prognosis or a prediction that, hey, based on this data, the dollar should be stronger, or based on this data, the dollar should be weaker, right? There's other factors. Will the Fed continue to raise rates? If the number is weaker and job growth seems to be down, then the odds of a Fed rate hike go down as well, right? If there's strong employment and strong maybe construction numbers and healthcare numbers and new people being added to the rolls, then that could mean more buyers, more people with money, and then a more demand for stuff. And then we could also see the dollar rise because the Fed will have to raise interest rates. That's been the previous under the Jerome Powell and Ben Bernanke and Alan Greenspan. There's also a question because there's no more forward guidance being given by the Fed. So basically, we're flying, the market's flying blind, the bond market especially. They don't have the data coming out of the Fed saying, oh, we want this target, we want this. They're like saying, hey, we're just going to let it go, and we'll make a determination and raise interest rates if we see that something needs to happen, and that we don't know what needs to happen. So the market could just go nuts, just go up and down either way. and just settle and be very random, right? So we want to wait till maybe 30 minutes or 25 minutes, an hour after the announcement. Let the market figure out what it wants to do, because the old rules could be out the window, or they might just stick to the old rule playbook. So it's very, very, we just know that there's going to be big volatility. And especially now, maybe you've been sitting in the market, maybe you're sitting in the euro, sitting in the pound, and it's been going against you, it's moving sideways. It hasn't made, why? Because they're waiting for tomorrow, guys. The first week of the month, they're waiting for non-farm payroll. After non-farm payroll, hey, you're gonna have a honeymoon 3 weeks of really good trading, and then we're gonna get the month end and the next non-farm payroll. So basically, the markets, the currency markets anyway, um, and maybe even the stock markets are looking at this number. This is the most widely watched number, and so you should watch it too. Unemployment rate still hanging around 4.2. Then we have a lot of Canada data as well. They also have their employment number too. So looking at dollar CAD could be a pretty interesting. We'll look at dollar CAD, especially because non-farm payroll, you're gonna get 2 for 1. You can trade the euro, you can trade the dollar CAD, and maybe maximize your fun and pleasure. Okay. So anyway, again, non-farm payroll, one of the most important, is the most important uh, economic announcement on the calendar. Probably maybe tied with an interest rate announcement, a central bank. What you think? What do you think? Let me know in the chat box what you think. What do you think is more important, non-farm payroll or an interest rate announcement from the Fed? Right now, so I'll go ahead and let me know. Okay, so that's for this Friday, right? And so we'll just look at next week's numbers really quickly, because we spent so much time on non-farm payroll. I also want to maybe focus on non-farm payroll, but after non-farm payroll, it's like, okay, what now, Greg? Well, well then we can let's go right to Monday. Let's take a look, right? Um, and basically I call this fund with flags, funds with flags, right? I know in the Big Bang Theory, there was a little show that Sheldon had called Fun with Flags, and he has his own little internet show where him and his girlfriend or wife Amy dress up in different costumes from around the world and have different flags, and they talk about the flags, right? Well, this is not fun, but funds with flags, and we just look at the flag. And usually, if we see the US dollar flag, we want to usually trade the dollar yen or the euro dollar or dollar CAD. Those are like the three I like looking at, right? Or any major currency pair, right? But the euro is called the anti-dollar, and so things that are good for the U.S. economy are usually bad for the euro, and if it's good for the European economy, it's bad for the dollar. So they basically have created the euro as a counterweight to the U.S. dollar. So the euro, even though we see the United States flag, we would trade the euro. So we look at existing home sales, very important. Oh, but we also have a very important announcement on Tuesday. We have the RBA interest rate announcement on Tuesday. They're widely expected to keep rates unchanged at 4.35%. And so you want to trade you want to look at the Aussie dollar, Aussie yen, Aussie Swiss. All those currencies will be in play on Tuesday um, at midnight, right? Midnight Eastern time. Well, that's kind of late. That's not going to be fun to trade. Then 21:30 we have national business confidence coming out too. It's supposed to actually drop. Business confidence is dropping. Existing home sales in the U.S. starts our first U.S. major announcement for the week. And home sales very important. It's supposed to drop from 4.09 to 4.07. Inflation rate, another, that's probably like the second tier inflation number, or no, under non-farm payroll. Supposed to drop from 3.5 to 3.4%. A lower than expected inflation usually makes the dollar weaker. So keep an eye on the number for inflation, even though we just want to see volatility. CPI is another very top tier announcement. Supposed to consumer price index, but this, call that I inflation. Price index. You're looking at consumer prices. What do you pay at the at the pump or at the grocery store, eggs and meat and milk and clothing, and they have a basket of the goods that people have, that a hypothetical basket, and they see if that basket has gone up or not. But they have stuff in there like bobby pins and refrigerators. No one buys a refrigerator every day. I bought a refrigerator last week, but that doesn't count. Okay. Then you have core inflation. Core inflation strips out volatile food and energy prices from the number, because food and energy can go up and down. Price of cattle, price of vegetables. I mean, I say the price of less is really falling, right, with this parasite that's going around. You can get like three heads of less for $1. Yeah, right. And then three hours on the toilet too for $1 too. Anyway, so you can see how different events in the news and announcements and things can actually cause prices to rise and fall. So, if vegetables and fruits and things are going down one week and eggs go up next week, well, easy food can go up and down very quickly. So what they do is they take out, or there could be, a heat wave causing people running their air conditioners, right? And so that could spike inflation. So when they take out food and energy and call it core, well, they can actually see what the real inflation picture is. Even though we use food, we use energy, it doesn't make you feel any better. Oh, inflation is falling, but you just got to pay more for food and energy, right? So here's 2.6%, 2.5% core inflation rate. And then they expect the core inflation rate month on month to actually rise a little bit from 0% to 0.2%. So you got a lot of people hollering about, affordability, 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 affordability. Well, they say that prices of rents and things are falling. I think my rent didn't change. Why? Because they sent a lot of people back to their home country, right? And so now you have a lot of empty places. So, but they're not going to report that on the fake news, right? Anyway, inflation rate month on month is supposed to actually rise a little bit from negative 0.4%. So we had negative inflation last. Nobody talked about that. And then it's up 0.1. But this is going to be in the news. Inflation's up 0.1%. But no one told you when it was negative 0.4%. How did it become negative? Is that when they give you money instead of taking money from you? I've been someplace where they like hand you, you came to the store, here's a couple of bucks, Anyway, moving right along, we have a Kiwi, New Zealand dollar, called the Kiwi. Business inflation's expectations, and they expect inflation to go higher, 2.53% to 2.7%. UK loves Thursday. They have the Super Thursday. They have GDP year on year. GDP stands for gross domestic product, and that's the financial economic activity of the entire country. Year on year is supposed to drop from 1.3% to 1.2%, and month on month is supposed to actually remain unchanged at 0.1%. And the growth rate year on year is supposed to actually rise from 0.9 to 1.6. And the GDP growth rate quarter and quarter is supposed to drop from 0.6 to 0.2. And this could keep the pound, kind of make it recover a little bit. It has dropped a little bit versus the US dollar. Thursday, also at 8:30, news announcement. This other one, the UK comes out at 2, just an hour before the UK Open, the London Open. London market opens up at 3 a.m. That's one of the trading opportunity to trade, one of the 3 trading windows that we trade in the Samurai Sword trading strategy, where we trade the 2 hours before the during the open of the market. So there's a Tokyo Open, there is a London Open, and there's New York Open, and there's a Sydney Open too, about from 5 p.m. that actually opens too. So it's actually a 4th one. So we use those 4 windows to trade the market. And we use a compounding strategy to take $50 to $50,000 in 30 trades using a compounding spreadsheet and using the Samurai Sword strategy and AI tools. If you would like to find out more about that, go ahead and reach out to me. I'm going to actually put the link. You can book a call to find out about this trading challenge that we have that's currently going on, the August trading challenge. It's there's only a couple of spots left for that. We're going to close that up, and but you can get in one for September. if you are interested. I'm going to put a link in the you can book a call, the 50 to $50,000 challenge, like my 50 to $50,000 challenge. Book a call to find out more MORE, right? There we go. And I'm going to pop that in the chat if you're interested. And I'm going to go ahead and pin it to the top. Pin message. Okay. So if you want to chat with me, right, for a free demo, free demo call. Okay. Then you can check that out. Okay. So yeah. So 2 a.m. They have traders like Steve. Steve does really well. Got a few hundred pips trading the London market over the past week, and so he gets up. Then I do the 7. I do the Tokyo session. That's 7 p.m. Eastern time. 7 to 9, I do live trading during our challenge, and people can look over my shoulder and see what I did. And I've traded gold. That was my thing, and we hit that repeatedly. Really a combination of pip and run and the samurai sword, and we really gave it some. We did like $494 or something like that. So I mean, winner, and this is this is a live challenge account. We start at $50 and we just scale it up. Right? 106, 21, 31, $10, $31, $35. This you get, and then moving down the spreadsheet, so we had $494, which is a pretty cool gain in our live account. Tradersway live account. Tradersway no longer takes U.S. clients. I've been grandfathered in. I've had this account for 12 years or something like that. So but we got these supply and demand zones and samurai sword breakouts and other things too. So if you are interested in being part of that, click the link and I can book a call with me on Zoom and I'll show you what we do. Okay. All right, let's continue going on here down to lots of U.S. data. This is going to be a really good trading day on Thursday. If you trade the London session and also the New York Open, you got core PPI. That's the producer, the producer wholesale inflation, 4.7%. Core PPI actually is supposed to remain unchanged, 0.2%. PPI month on month actually rose from negative 0.3 to 0.1. Initial jobless claims too is coming out. It's supposed to rise from 199,000 to 204,000. So big a big euro trading day for Thursday. You want to put that in mark that in your calendar. You want to print this out or pin it. Take a screenshot and pin it on your desktop so you can always know. You have one monitor dedicated to the economic calendar and the U.S. dollar. Next week, we have a GDP growth rate year on year, supposed to rise from 0.5 to 1% in the Eurozone. Retail, and then we have growth rate quarter on quarter, supposed to rise from 0 to 0.4. And then we have retail sales year on year, supposed to rise from 6.7% to 6, actually drop, 6.7% to 6%. And then we have U.S. retail sales month on month, supposed to rise from 0.2 to 0.5%. It's back to school. Summer is ending, but this is for the month of July. So we'll have the fall numbers out next month. Michigan consumer confidence actually was a drop from 55.2 to 54.6. And I think that should do it for Friday. Let me just show more. No, we have some Sunday with some Japanese data. Okay, so that wraps up the economic calendar. Again, make sure if you want to know what to trade, look at the flag, and after wait till about 30 minutes after the announcement, and then that's going to be where people are going to have all their attention put on for you to trade. Okay, don't try to trade during the announcement or try to game it unless you have tools like we have the Pipper Run for forecasting. That makes it a lot easier to do that. Let's get to the charts, though. I know that's what you want. You go, Greg, enough of this. Enough of this. Fundamentals. Get to the charts. I go, yes, we'll get to the charts. We're going to use TradingView charts. And if you need a trading, if you do not have TradingView, like to get TradingView, I have a refer a friend coupon here for $15. If you are interested in that, let me give you a copy of that. You'll get $15 if you use this link to join TradingView, right? TradingView, $15 bonus. Click my link. Click my link. You can click my link. Click my link. All right. Right. So there we go. So let's go ahead and get into the markets. Let's launch super charts. And we want to get to our template. Bulls versus Bears. Let's open that up, right? We got a lot of stuff going on here. Bulls. Yeah, one of my students, Steve, programmed this Bulls versus Bears baseball kind of thing, bull, bear, and a net, and it changes color. It's pretty cool. Oh yeah, we were trading gold. We were crushing gold. We were taking it north. We were taking it south. But let's get to one screen. Let's clean up all this mess here, right? We were going to the moon. We had a rocket ship. Yeah, we were crushing gold last night. Let me go remove all drawings. Sorry. It gets really a lot of fun when you're trading with me. Let's go ahead and come on, baby. Give me a moment here. Oh, we gotta have our really. Come on. All right. We'll start with the dollar index, and we'll get to gold. I want to show you gold. Gold looks good. I love gold. I haven't liked gold ever since we got on the other side here of March. It's been a sled ride down, bro. But I think it's over, and we'll talk about that. Let's start with the dollar index, the U.S. dollar index, a basket of currencies versus the U.S. dollar. Remove all drawings, and here we go. Here we go. All right. Let me make sure that we are. Got it. Okay. All right. So here we go. This is the U.S. dollar index month on month, and this is bearish. We have an inside month candle, right? We had green candle. We had a nascent uptrend. So our nascent uptrend right here. There we go. Right. And now with a small body candle inside the body of a bigger candle, which is bearish. Right. So we're looking bearish. We're gonna go. This is our 50,000 foot view. This is like our satellite view from high up. We're gonna zoom on in down to a weekly chart, and we can see, oh snap, right? Maybe like a multiple topping action here. Big topping action in the 101.70 area. And we had 1 week, 2, 3 weeks, 4 weeks, 5 weeks, 6 weeks. We couldn't get to the top, and the bulls kind of gave up. We have landed on a rising trend line. We want to see if that trend line breaks. And if it does, then it's a long way down, right? We have also support where we came off of support in the 96.28 area. We've been bouncing around since July. And so usually we get 3 drives. So 1, 2, 3 drives to a top. We also have a high that we had back on January 13th, 2025. We take a Fibonacci from the high to the low. We can see we rammed up against the typical profit-taking rise, the 38% retracement on the U.S. dollar index at 101.70. and then price again for 5 weeks have unable to penetrate this to go higher to the next level of 103.29. It was a place we have not been since April 7th, 2025. And looks like we're selling at the critical moving average here, our 200 simple moving average. Is that our 200? Yep. And then we're testing support. We're at the 23%, and we're testing support. So we might get a bounce from here, right? Even though we have a big bearish candle like that. Bearish follow through on a Friday, it's kind of rare, but can happen because of non-farm payroll. But we're at a critical point. Let's scale on down to a daily chart. And you can see we're bouncing off that 23% retracement rejection area on the daily chart. Each candle represents 1 day of time. And we can see that initially lots of strong momentum, and then that momentum starts to wane as we start hitting this Fibonacci area. Let's go down to a 4-hour chart, walk it down, and we can actually see that price has actually been turning around, right? We had maybe a reverse Adam and Eve pattern. We got the Adam and we have the Eve, and then maybe we continue going up, right? And we probably have another Fibonacci setup here, taking the swing high that we had on July 28, 2026, taking it down to the swing low of August 2nd, right? And now we have some possible targets. We could get a rise up to the 100 spot 24, almost a quarter line 25 area, then 151 area. It kind of organizes itself in quarter lines, 0, 0, 25, 50, 75, right? And we have a very cool Fibonacci expansion. We got a backward 7, which can be used as a Fibonacci projection. We teach that all in, if this is like, what's he talking about? Well, sign up for that demo call with me, and I can explain this more to you. Sacred math, how we can use these Fibonacci's of expansions and retracements to actually target areas that of resistance or support. The 100% expansion is a typical expansion. It's the equal wave pattern taught by H.M. Gartley back in 1934. So we can see the dollar actually rise 100 spot 30. We're not there. We're almost, we're like a little after lunchtime, US time, which means the euro is probably tanking because the euro goes the opposite direction of the dollar, and the dollar is rising. So we might see somebody's already read non-farm payroll because they all pass information around. There's interns with cameras taking pictures, telling their friends, and this looks like whatever non-farm payroll is. People are positioning for a stronger dollar, right? A stronger dollar, which means a weaker gold, weaker. Once you understand where the dollar is going, you know exactly where everything else is going to go. Why? The dollar makes up 85% of the currency volume connected with the euro or connected with the pound. That's why they're called the majors. They're called the majors because the dollar is the reserve currency of the world. You have to have the dollar to do any type of international trade. So with this, if you understand that this is a bullish pattern, a bullish ABC pattern with a projection of at least 130 mark pattern, we can actually position ourselves ahead of non-farm payroll. So I'm giving you this as a bonus. If you're watching this, this is a bonus, and I'll probably do a follow-up to let you know, to show you where it is. They said, people ask me what my crystal ball is, and I'm really giving away my crystal ball right now. Okay. So bulls versus bears. I am bullish the US dollar. Bye. Okay. Let's go ahead and take a look at the euro, the anti-dollar. We're going to start with our 50,000 foot view on the monthly chart. And you can see euro. Typically, the dollar is kind of strong in the fall anyway. But here we go. So here is the euro monthly chart. And the first thing I see is a bearish ABC. I see a bearish ABC pattern. where you have this A, B, C. In the LE wave terms, if there's a three-wave correction against the trend, right? The trend is down. The overall trend is down, right? But Ralph Nelson Elliott says there's usually a three-wave correction against the trend, right? Usually get a three waves up and then a drop, right? Like this one, A, B, C, and then a drop, right? So we usually get these three-wave corrections. So we have this really big three-wave correction that has probably also satisfied a Fibonacci projection, a backward 7, going the other way, right? And the 100% expansion was right there, and we stopped and we turned, right? In fact, H.M. Gartley would sell this as part of his workshop back in the 1930s for in U.S. in dollar terms now is $15,000, right? So he would tell you, if you see an ABC like that, this is not a bullish pattern. This is an extremely bearish pattern, totally bearish pattern. This like amazingly bearish pattern, and this thing like go down here really very quickly, right? So again, I would not. I would look at a stop above this area. Again, patterns can break down. There's no guarantees. You want a guarantee, get a CD at your local bank. But here we go. So this is our 50,000 foot view, satellite view. We can see that, hey, just like we could look at, like in the during like the Iran war right now, people can actually look at the Strait of Hormuz, and they can actually see all the ships moving through, and they have that 50,000 foot view. And when we're trading, this trading is a war, and we are looking at this the charts as a war, as a battleground, and we should be able to we have to employ some of those tactics. Sun Tzu, in The Art of War, said that every battle is won before it's ever fought, and it's all based on strategy. So like, how can you win? Well, you have to look at lots of data. You have to be able to look at things from a higher view. Right? You want to look at that big view to be able to see all the different textures and corners and where there could be things going on, right? And I'm trying to get you a satellite picture here, and we're seeing it everywhere, but not right now, right? But so we're getting this 50,000 foot view, and usually what comes after C is a 5-wave pattern down, right? This is what Ralph Nelson Elliott unlocked in his in his wave analysis, right? So after a 3-wave correction, we would continue, and these could be at different sizes or things like that, but we should see a move down, right, from this. But again, you always want to double check and verify and look, because we do, within these waves, you're going to find subwaves, and one of these subwaves can move 70, 80 pips in the opposite direction before it moves in the direction of this hypothetical wave. Okay. I mean, look at all the little pullbacks and things like that. And if you were long here, you would have been stopped out. So you always be careful when you're using wave analysis. And in fact, we have a course on wave analysis too. If you're interested in that, you can mention that in the chat box, right? So here is our weekly chart. Let's drop down to our daily chart, and we can see that we are rallying up from a double bottom, from a Fibonacci area. We can see, and we're running into a supply zone. A supply zone. I don't use supply and demand zones that often unless they're significant. When we have lots of, from a double bottom, usually prices start losing momentum as they get close to a 200 moving average and this old area of congestion, which extends really all the way back here, right? We got a break above it, settles, right? And so we're running right into that. So this may stop price, and then we can see a move down. Let's go ahead and drop to a 4-hour chart. Oh, yeah, we can see the 4-hour charts already. These are our dealer charts. 4-hour charts already topping out the double top, right? So even they're getting ready to take this southbound train, like all aboard, all aboard. Southbound train is getting ready to launch to the south side, right? South side of Chicago. If we get a break, if you want to be conservative and wait for our break support 1350, we probably could see a precipitous drop down to down to 112 area. It'll be there's really nothing beyond. Oh, here we go. We have support areas. You just got to look at the wicks going left. 112.11. We also have one spot 1063, right? So I mean, this is probably our next. Once we clear this area here, I mean, we can get down to this area probably pretty quickly, and then once we break, we'll start moving, because you can see the topping pattern here. We went up, move sideways, and then drop, which is like the typical way that price behaves after exhaustion, right? So bulls versus bears. Let's drop it one more to a 1-hour chart. I mean, let's say if we wanted to get short, let's say, I mean, could we even take a trade right now and see how that would work out? All right. All right. So yeah, so we're moving in line with the market tide. So let's see if we can pick up like $300. Oh, $300, not that $3,000. Oh, we need to probably get down to our 5-minute chart where we like hanging out at. Right. Right. Let's get that stop loss in place too. Let's get that stop loss. Risk $1,300 to make a. There we go. How about that? Right. Right. And we'll come back. We'll come back and take a look at that, and we'll put some trading marks on there so we can see where we got out. Right. So we're just following using our top-down analysis and just and then matching it up, right? So we got short euro dollar at 1.159, or 1.1519, and then we'll see. If it hits our target, great. If it gets a little bit short of our target, we'll go ahead and take what we got. All right. But I'm bearish. Bulls versus bears. I am. Ooh, my cursor is stuck. I put a new battery in here. I put a new battery in this mouse. Now it's gonna spin around, and we are like escape, right? Okay. All right, let's moving right along. I'm gonna have to close. I'm the victim of my victim. I'm not victim. I opened up too many tabs. How many of you guys, tell me in the chat box, do you open up too many tabs? Because Chrome is so easy. Click the button. But after a while, it becomes harder and harder to get those tabs closed. You get so many of them, there's like the invasion of tabs. Right? All right. Moving on. Let's go to the pound, go across the harbor there. Go across the English Channel. Let's move all our drawings and remove all of our drawings, remove all drawings, and let's get to the monthly chart, right? We always want to start. I don't start the monthly every day. But I do like the beginning of the week or one time a week, at least check it once a week, right? Because it's pretty much we haven't really gone anywhere. You got a double bottom here at the 1.050 area, and then we have a top high there. And every time we see a wick, you just pop a line on there, and we really have been stepping down and stepping down. Every like top wick on the monthly chart, and you can see that we really have been on a sled ride down ever so slowly, and then dropping down to a weekly chart, and we can see that we are just hitting a bunch of top, lots of resistance here, right? And it's pretty messy on this weekly chart. We do have an uptrend from the low, from the Queen's death, Queen Elizabeth's death, and then when Prince Charles was coronated, then we said the Prince Charles bump that we've been getting since then. But we still have an overall downtrend, and price was rejected at the 1.3736 area and moving sideways in a very tight channel. And I think we're going to break south out of that channel. Let me highlight that channel for you, and you should be able to see it. But we haven't gone anywhere. We've been stuck in this box, almost like a samurai sword, right? We're stuck in the box, and bullish momentum against the downtrend line is probably not going to happen. And we'll probably break south out of this, but we need to like zoom down and try to refine our entry from a 50,000 foot view. There's really nothing to do here, right? You can play the range, buy the bottom of the range, sell the top, but we really haven't gone anywhere. And a lot of times central banks just want to just hold their currencies in place. They don't want it to go too low, which will create inflation. They don't want it to go too high, which suppresses exports. And so you really, it's a real crapshoot when you're in here, unless you're down to an extreme low. This is where you use like an indicator like stochastics to kind of like play the range, play the field. And then you just look for oversold and overbought areas where you can buy and sell and buy and sell. I mean, it's actually a pretty safe market to buy and sell in, right? You sell there, and then sometimes it kind of hangs around. But that's actually this is kind of a telltale here that we may with non-farm payroll, look, all the momentum just went to like nothing, right? We just went flat. Each one of these candles was 4 hours. Can you imagine picking the British pound and 4 hours of sideways like that and you haven't gone anywhere? It's like, really? Like, no. Bulls versus bears, I'm just gonna say bearish, but there's really, nothing other. We do have a high, a lower high. We don't have a lower low. Um, and we're stuck in a box within a box, right? So we look for a break. If we get a break below, say 34.21, I mean, I really wouldn't trust this until we get outside the box, right? Something like this, though, could move very strongly because it's been coiling, compressing for so long that the tighter the wider the wider the wider the range, the wider the base, the higher the race, or the lower the race in this case. So if we get a breakout from here, it could be very substantial because all this power has been pent up inside this box. Once we break, and you can actually set an alarm at 1.3033. And once it clears that, we could really get a really big move. I mean, that's far, far away. It's like 400 pips away. Bulls versus bears, I am bearish. Let's just leave it at that. But it's not my top pick because there's really no technical picture here to really look at. Okay, let's go to Aussie dollar. One of my favorite pairs to trade. It's just really smooth, very like, hello, look at me. I'm a bearish head and shoulders. I'm a bearish head and shoulders. Sell me, right? It's like, really, there's not a lot of tricks here. Very like straightforward. The currency is like the people, very straightforward, very, easy to talk to, no pretenses. Just, okay, I'll just sell this, right? 4-hour chart. Monthly chart, though, we can see how we have been etching down, trying to come back, but still battling overhead resistance, right? Of this downtrend that has just been, I remember being on the desk when we were up here, and then there we go, up here in this, 109.85 area. We do have a rising trend line, though. So you have this indecision, and central banks just basically want to keep their currency from going super high or super low. But we can see that after rallying up against this trend line and dropping, and then we have our completely overbought here on our stochastics, right? We could probably see prices drop on down. Look at a weekly chart. We have a high, a low, a lower high, and another little head and shoulders within within this, right? Bearish head and shoulders. And remember, we do have a Ray announcement. So be careful of this, but non-farm payroll is the most immediate threat. And we would want to see a break of the neckline, of this neckline, before we saw a further move down, right? And we can use Fibonacci expansions to give us a possible target if we wanted to trade this. Or your entry would matter because you want to see confirmation break of some structure. 66.00. I mean, golly, that's like a 400 pip drop, right? It'll be very interesting to see, right? I mean, we could see a break north, if we get above 72.53. Probably not going to happen. But again, anything can happen. Daily chart, small body indecision candle with an inside day candle. This is a small body candle inside a larger body candle. We'd like to see that one red. But if we get below 70.20, this would be bear territory for a collapse back down, at least down to the trend line. Trend line support comes in around the 69.07 area on the Aussie dollar. Bulls versus bears, I am bearish. Let's do this thing. And all right. Kiwi dollar. Again, the dollar is in the driver's seat right now, but Kiwi has a tendency of bucking the trend. And on our monthly chart, and hello, cursor is like sleep. Remove all drawings. Okay. We can remove this out of the way too. You can see we haven't really gone anywhere. I mean, look, this is a 30 days in a range. We just wick up, wick down, stay in the middle. Wick up, wick down, stay in the middle. This is a very tight, boring range, right? Can be traded on, if you get down to lower time frames, you just say, well, anytime we get down to 56.37, you go buy, and anytime we get above in the 600, we could sell. But it's really a boring market. There may be small trends within, and that's what we like scalping with the samurai sword strategy. I mean, we are just, this is really boring, right? Weekly chart, see off support, got a nice little uptrend, but we could be, running out, we went from 56 to 50. It's 200. 200 pips is nothing to sneeze at. And your chance of getting blown out of the water by something moving like 500 pips in one direction, this is not the one, right? Well, we can see that this little uptrend is kind of running out of juice. Small body candle, 4-hour chart, and we're kind of like moving sideways and topping. And this has a tendency to, after a run up, that tops out and then drops, right? So if we have the same reoccurrence where we have a move higher and we top out, well, then we could be heading down for a move down, just like we had here, right? Just like we had here. Again, past performance is not an indication of future results, but humans are pattern recognition creatures. And so if we see a pattern, we can reapply it and also combine with other data like we have based on the movement of the US dollar index heading downward. We could possibly see that going on too, right? All right, bulls versus bears. I am bearish Kiwi dollar. Let's do that. All right. Let's go ahead and move over to the dollar or dollar yen. Dollar yen is spectacular. We had Scott Besant, Treasury Secretary, write a note on his desk that Reuters published that he bought billions of dollars of Japanese yen. And so that was kind of cool how he did that, how he got everybody to start buying yen for him, and they probably didn't even lift up a finger to do it, right? All he had to do was leave this note and let some idiot publish it, right? It's like Blue Horseshoe likes Anacott Steel. Let me know what movie that's from. Blue Horseshoe loves Anacott Steel. So Scott Besant writes a note, to-do list, buy Japanese yen 5 to 10 billion. He left this note, right? And then Reuters publishes it. And what happens? Let's see what happens, right? Well, and Japan's been throwing $35 billion and the US is only going to throw $5 billion at it. Well, $5 billion plus that note, you probably got $100 billion because that really dropped the dollar yen exchange rate for a moment. But look what happened, right? So the note comes out, everybody buys the yen, and what happens? It retraces. It's been retracing, right? It didn't hold it that long. About it. What this is go to a day. So 1 day, 2 day, 3 days, 3 days. 3 days it came down. This was intervention too. This was Japan by itself. This is Japan and the US together, plus all the people who Scott Besant trolled. Oh yeah, I got this to do. And guess what? Because this is 35 billion that Japan said they did. This is 5 billion that the US did. Why? Because he wrote a note and he let everybody know what he was going to do. And riddle me this. You give me that note, guess what I'm doing? I'm also buying yen. And that was pretty cool. They tell you how much money they're going to do, and then you do it. Right? However, I know that in a $7 trillion a day, which is 1,000 billion, so 7,000 billion market, 5 to 10 billion is a drop in the bucket. So after they drop that in the bucket, guess what? It has sucked that up. Thank you so much, Mr. Scott Besant, and all you guys and the Bank of Japan. That was delicious. That 5 billion was a snack. Do you have any more? Because that's all it did. The bulls came up and ate that, and they brought it back up, right? So we got to a low of 155, and within 3 days, we're back at 158. We're about 300 pips. So that tells you why, because you can't fight an uptrend. Higher highs and higher lows. Central banks can't fight this. Can't fight this. Dun, 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 dun. Can't fight this. Dun, 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 dun. I should make a song. You can't fight a trend, right? Because this thing goes back far. This trend goes back The uptrend goes all the way back to 2012. This is a 14-year uptrend. I think it's older than that. It's like, but we're at 40-year highs. And Scott Besant was trying to keep the Japanese yen from falling into this abyss. This represents the abyss. This is the abyss. There's nothing here. I mean, I think there's a little bit of resistance here from like back in 1980. If anybody's alive to remember that, to even trade that, Price does have a memory though. You know, I was junior high school back here at 77.48. 77.48 would just destroy their economy because they rely on imports of oil, and oil will also become super expensive when your currency can't buy as much. And also, yeah, so I mean, so this is to keep them out of this zone where, I mean, we will jump up. I mean, if we break and close above 65, we're going to be moving at 1,000, 2,000 pip increments because there's no space there. I mean, then it gets nuts. You know, right? Well, I think next high like 279. I mean, yeah, it'll go fast, right? So that's why they're trying and trying and trying and trying. But this is like a cup and handle formation. You know, a double bottom formation. There's all kinds of like bullish formations here where this gap down here gets filled, and this creates a total collapse of their economic system. So that's the battle is here. That's why they keep doing, you know, writing notes and doing funky stuff, but it could get serious really fast. So I'm bullish dollar yen. So if all that said, right, I hate to be be a spoiler and be like, hey, I don't care about your economy. I'm going to sell your currency too. What we can do though is go to Japan and support their economy and eat their sushi and eat all their really good food and buy their electronics. Because Japan is a great travel destination. With the strength of the U.S. dollar and the weakness of the yen, there's people I'm going to plan a trip with my girls. We're going to head to Asia and we're going to go to Japan. Japan is on sale, brother. So before this happens, before everything goes to pot there, you'll have a great vacation with very little money. This is the time to go. So I am bullish on Japan, but I'm bearish on the yen, right? But I'm bullish on dollar yen. Buy. And every time they intervene and they drop it, I'll be buyers at the bottom. It's like getting it on sale. Okay. I mean, we can drop it down to an hour chart. Let's see how our euro's doing. Our euro, I don't think it's moved any. See how our trade is doing there. All right. Oh, I made $30. Look at that. $30. We bounced off the low. I'll take that. That was pretty good, right? I might as well get paid. I'm not getting paid anything for doing this anyway, so I might as well get paid, right? Okay, let's go ahead and get to where were we? Dollar yen, dollar CAD. That's the other one. Oh, dollar CAD is beautiful, 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 beautiful. It hasn't done anything. If you look to the weekly, monthly chart, you're like going, "Oh my god, this thing is boring. It hasn't gone anywhere. It's just moving." Got dinosaur over here at the end. No, it's got the sideways consolidation. Just, I mean, if we can get back to 161, it'd be amazing, right? It's like, take off, you hoser, eh? Okay. Right here. We had support 1 spot 3413. And we just broke out. Let's get down to the weekly chart, and this is what we want to see, right? We have a like a pennant and an uptrend. Nice, beautiful little pennant. People, what's a pennant? Think about the baseball. They got the you know what? Here we go. Here we go. That's a pennant. That's a Raiders pennant, right? See how the shape? See the shape? Match shapes, guys. This is like Sesame Street. See the shape? See the triangle? I don't think Sesame Street is that academic anyway. I don't know who teaches shapes and colors and numbers since the electric company back in the day, right? Or something. Or multiplication rock. This is a triangle, or this is a pennant in an uptrend. Usually pennants in an uptrend break out. Well, I'm so excited about the pennant, right? Like the Dodgers won the pennant. You know, when you think of baseball, you know what pennant is. If you're not a baseball fan, you don't know what a pennant is. It's not like something that we would use every day in everyday language. But boom, usually a pennant in an uptrend breaks out and goes north, right? We have higher highs, higher lows. That is a good, you know, low. Right. So if higher highs, higher lows, we can break out north. So we're bullish on dollar CAD. We can drop down to a daily chart, and you know we can't get below 40442. Kind of looks like a descending triangle, but we're in an uptrend. So you have an uptrend and a descending looking triangle kind of thing would be bullish, right? And then we would see we want to see a breakout above the highs. Let me zoom in on that. Dollar CAD bounce off of support about the one spot 400 area. Old high, one spot 4079. Bulls versus Bears. I am bullish. Maybe to see 4126, maybe even a continuation move. Yeah, I mean, that's probably, around here, there's lots of congestion in here. So I wouldn't go see it go past this zone here, but that's quite a bit of space there, right? I mean, you can do a risk to reward kind of thing, and you can pop that in there, right? That's like 2-to-1 risk to reward ratio there. Okay. All right. Let's keep on going. We've covered the currencies. Let's go over to, we'll go to gold. And gold is looking interesting too on our monthly chart. We can see that it's been, kind of languishing, pulling back. It's a, pullback and over its overall uptrend. It's just that if you were going long for too long, you were getting spanked. But we got a little life yesterday. In fact, I took a bunch of longs yesterday in gold, and I think she's back. But be careful though, because it's still, you know, this too is up like a pennant and uptrend. Got like a or flag. It's like a bull flag. Gotta watch though, because the dollar is strengthening, and we got non-farm payroll. But I know, by the fall, we should be breaking back out again because the dollar is seasonally weak. See, we got that little, I was trading that little pop right in there. And we can see price on the daily chart bottoming out. We put in a good bottom here at 39.59. Could not get past that. The Bears are trying their best to take it down to 3,000. But no, we got a breakout above resistance. Looks like strong volume, looks like strong momentum. Right? Look at that breakout. It could be a fake out. We still have this upper resistance line formed by these 2 points, and we don't have very much space left. So this could be, like a fake break like we had here. Like, oh yeah, it's gone up, and oh no, right? So I'd be careful. Bulls versus Bears. I am cautiously bullish. The dollar is going to be pretty strong tomorrow, so I'll probably be, but you've got this another pennant and uptrend, right? Yeah, I'm going to put my hat in for the Bulls. Not this. No. All right. All right. Probably back up to the trend line. Resistance is 43.83. We could see a continuation move there and then rejection at this area. I would reassess what price is doing at the trend line. Okay, let's take a look at oil, black gold, Texas tea, and the war continues. We do see we haven't done waves in a long time. We've completed wave 4 for 43. Wave 4, and maybe we head wave 5 to the south side of Chicago here. Maybe we see a wave 5 extension, break down past this low that we had. So even though there's bombs being dropped and embargoes and blockades still around, we do have crude weakening, right? It's not surging. So like all the bad news is priced in, and I think we will continue to move down in oil, and I'm really thinking we'll see negative prices in the not too distant future. That's why I think raising interest rates to fight inflation at this point is really kind of stupid, because when the oil prices fall, everything is powered by oil, whether you get lettuce or whether you get groceries, or they're coming on trains, they're coming on trucks, and the oil prices are part of the inflation. And if you want to get cheap fuel, everything is going to get cheaper, and you're going to have all these high interest rates that you really didn't need to have, right? Because it's what Jerome Powell said. I know people don't like this word because he used to say it. Well, inflation is transitory. Well, no. Well, this case, he was just ahead of the schedule. This inflation is transitory. Everybody's got their panties in a knot over inflation, but it's all it is you strip out core inflation, volatile food and energy, you take out the energy part, inflation is down. Right? So, well, how about the price of the pump? Well, look at this. If oil is coming back down and keeps going down back to its old price, we're going to have cheaper oil, cheaper component of all the things that we buy is going to be much cheaper. And then you're going to have these high interest rates that are going to slow the economy down, when really this is a tax. This is the tax on the American people. So, and it's in a downtrend right now. So let it work its way down. And I think the Fed is smart for not raising rates, right? And the 3 people who dissented are like, I'm not calling them stupid, but that's what messed up the economy last time, back in 2000. Let's keep hiking rates. Oh, we went to a recession. That's stupid. Well, it's like, hello. Anyway, so this is our inflation gauge. Right? Forget about PCI, PPI, blah, 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 blah. Look at oil. This is your oil indicator. If this is going down, stuff is going to get cheaper. If this is going up, stuff is going to go higher. Simple. I don't know why they don't want to make it that simple, because if you did, then you wouldn't have any political talking points. You couldn't you can affordability. It was like, okay, control immigration, control the price of oil, and you've got a perfect society, right? Bitcoin. Oh man, you got Jim Cramer saying that he is abandoning Bitcoin, and I'm saying that's probably very bullish for Bitcoin, right? Because we are dollar strong. We might have another leg down here, but we are sitting on some Fibonacci deals, right? We're sitting at the 38% retracement of this move from the lows of 14,531 that we had back in 2022 to the high of 128.57, and then we're bouncing on the 38% retracement. 38% retracement is a very significant support area in mathematics, in the markets, and where computers and all kinds of traders look at this. That's why I have this level in red. because it's very significant. Price has tested it, retested it, has not broken below it. And so if we break above 66, maybe 67,000, we could reignite a new bull rally in Bitcoin. So bulls versus bears, short-term bearish. I am medium-term bullish. Okay. Let's go to the indices, NQ and all those guys you like trading. NQ. That some people like trading. What is NQ? NQQ. No, answer NQ. Right. NASDAQ futures. NASDAQ futures. I mean, what are you going to say? Higher highs and higher lows. This is an uptrend, right? And we pulled back and we got an uptrend there. Yeah. August is usually negative for stocks, but this is an unusual market. We got to look at the trend. The trend's your friend, and it's up. So I'm bullish. Any pullback is a buying opportunity. My computer is stuck. Hopefully, our trading view is stuck. Maybe if I move something around here, maybe. There we go. Yeah, so every dip they're buying the dips. They're buying the dips. Don't be a dip, buy the dip, right? So NQ, we're topping out at 30,000, but I think the high was 32,000 or so. Did we get that high? Did we get to 32,000? We got this flat consolidation. Price dropped in an ABC pattern. They're probably going to start a new 1, 2, 3 up for new highs. I think we just keep making new highs. So NQ, bulls versus bears. I am bullish NQ. Let's go to ES, S&P 500. ES. There we go. We had a trend line break. We did a little ABC, and we're starting a new way up. I drew that line last week, and we're just breaking new highs, guys. It's just just time your entry, drop down the lower time frame chart, time your entry, and every one of these pullbacks and uptrend. Right now we're resetting. It's probably gonna be bearish tomorrow's Friday profit taking. Probably gonna see a pullback, a reset, and then Tuesday we'll probably be back up again. Right. You can actually take a Fibonacci on the recent low that we had, the spike low down to 73.20, take it up to the high that we had, the new record high. 38% retracement takes us down to 70,630. I'd look at entering longs at 76.30 for a move higher to 79, right? 7,900. Bulls versus bears, I am bullish. I trade Asia. I probably won't be up that early, but if I see a move down here and I can trade on the Forex market, I most certainly would love to take that, right? It's like, yes. Okay. And hey, guys, if you want to join my free school community here at Elite Traders University, come over to school.com/Elite Traders University. Look at all the people who want to become members here. I'll put the link in the chat box. Love to have you here. I pop stock trading, not stock doing, Forex trading tips, charts, tips, and conversation. Come over to the free school community here. And you can learn more about our $50,000 to $50,000 challenge as well. Okay. So there is our free school community. Again, I would love to see you there. And with that said, I want to thank you so much for being with me, for joining me for Bulls versus Bears, the Strategic Market Forecast. My name is Dr. Greg McLeod, a 30-year trading veteran, former Wall Street currency analyst. I love you guys. God bless you. My mission is to help busy professionals become professional traders in 90 days or less. Reach out to me at greg@elitetradersu.com, and I'd love to talk to you. All right. Cheers. Bye-bye.